The Bank of England announced that it had cut interest rates. They have been cut from 4.5% to 4.25%, a fall of 0.25%. It was expected that they would cut interest as the threat of an escalating global trade war looms and the economic growth outlook worsens. Most economists did predict this interest rate reduction. Some analysts, though, thought actually that members of the Monetary Policy Committee could push for a larger 0.5% point cut in the hope of reducing borrowing costs further and easing pressure on households and businesses, but they didn't. They've gone for 0.25%. The vote split, that's always interesting to look at. 7 members of the bank's Monetary Policy Committee voted to cut interest rate. 2 voted to keep it unchanged. None of them voted to increase it. It's significant today because it's the first time that the Monetary Policy Committee has met to decide monetary policy since President Donald Trump's Liberation Day tariff announcements last month. And it normally comes bang on midday, the interest rate decision, but they decided to delay it today by 2 minutes to honour the silence and mark that 80th anniversary of Victory in Europe Day. So just to remind you that in the last few moments, the Bank of England has cut interest rates. They've cut them from 4.5% to 4.25%. Good news for you if you are trying to get a new mortgage, perhaps at the moment. Not such great news for those with savings. This fall of 0.25%. The big question is, will it help control inflation? Some economists have warned that the UK's economic growth could slow sharply over the next 2 years because of Donald Trump's Liberation Day tariff announcements, and that will have a real impact on British exporters, but potentially could also weaken spending among households and businesses. So this decision will be looked at closely. Economists will also be paying close attention to the Monetary Policy Committee's forecast for inflation and economic growth. We're just waiting to hear what they have said about that. Some have thought that those could both be downgraded, and this could provide strong signals that policymakers are prepared to step up the pace of future rate cuts. We're going to get a statement from the Governor of the Bank of England, Andrew Bailey. That's at 12:30. That is always interesting as well, because that gives us a clearer idea of what the thinking behind the decision that has been made today is. When we look at this graph, you can see the increase in interest rates that we saw going up steeply from 2004 to early 2023, from 2022 to early 2023. That was really felt by those who had mortgages at that point, especially those on tracker mortgages, stabilised over a 12-month period from early 2023 to mid-2024, and then it has fallen slowly and gradually since then. Inflation has also fallen in recent months. Now, that is something that will have been in the minds of the bank's Monetary Policy Committee when they were making this decision at interest rates. They use interest rates, of course, as a tool to control inflation, and they will be hoping that that will continue to fall. So just a reminder that breaking news in the last few minutes that interest rates have been cut from 4.5% to 4.25%.